$65.05 per troy ounce. That is the latest market close figure, and it firmly anchors our discussion today in real-time stakes. Right now, silver is holding near this major level, and the sheer momentum we're seeing, it's forcing institutional and retail investors alike to pay incredibly close attention. You know, this isn't just a gradual passive climb we're talking about, it's an aggressive, high-volume move driven by shifting macroeconomic fundamentals that we really need to unpack.
To really grasp the scale of this market, let's break that headline number down into tangible measurements. So that $65.05 per troy ounce translates to roughly $2.11 per gram and a whopping $2,105 per kilogram. Breaking it down like this really helps us visualize the vast amounts of capital flowing through global exchanges right now. But here's the absolutely critical thing to remember. Silver is traded continuously during global market hours. This means these prices fluctuate minute to minute, constantly bouncing around the mid-60s. So if you're checking your own tickers later, don't be surprised if the numbers are dancing around. Volatility remains highly elevated.
Which brings us to the ultimate question driving both investor anxiety and excitement today. After such a powerful upward move, can silver actually push toward that major psychological $70 resistance next? Or are we staring down the barrel of a sharp pullback? It's literally the question every trader wants answered right now. Well, to figure out the probability of either scenario, we have to look under the hood. We need to understand the unique forces that actually drive this particular market. And this brilliantly illustrates silver's unique superpower in the commodity space. It lives a double life. On one hand, it acts as a precious metal, a classic financial safe haven asset for investors trying to hedge against inflation, shifting currency movements, and geopolitical uncertainty. But on the other hand, it's an absolutely essential industrial metal. This dual role creates this fascinating push and pull dynamic. It's exactly why silver demand comes simultaneously from nervous investors and from bustling industries around the world, and that's what fuels its notoriously elevated volatility compared to other commodities like gold. Let's look a bit closer at that industrial side, because it gives silver a formidable price floor. The baseline global demand for silver is exceptionally high, and it's driven by relentless modern innovation. We're talking about the microelectronics in our smartphones, high-precision medical equipment, and the rapidly expanding solar technology sector. To put this unyielding demand into perspective, a typical solar panel requires about 20 grams of silver to manufacture, and a modern electric vehicle, that can use up to 50 grams. These aren't just niche side hustles, right? They're fundamental pillars of the modern economy that ensure the industrial appetite for silver literally never sleeps. So, we've got this massive, unyielding industrial baseline. But you might be wondering, why does this matter for silver's sudden, explosive price spikes on the investment side? How do broader macroeconomic forces, specifically things like the US dollar and the Federal Reserve, actually connect back to this shiny metal? Well, as you probably know, commodities don't exist in a vacuum. They are deeply and sometimes violently sensitive to the macro levers pulled by central banks. Just look at the recent market action. It's been absolutely locked onto expectations surrounding U.S. interest rates, creating a very specific chain reaction. It all started back on August 14th, with reports showing softer economic data. Now, that soft data immediately reduced expectations for a September Federal Reserve rate hike. And as we know, when rate expectations drop, it pressures the U.S. dollar and bond yields lower. This ultimately creates massive tailwinds for non-yielding assets like silver. Basically, when the yield you get from holding cash or bonds drops, silver suddenly looks way more attractive to global capital. But we have to remember this macro lever swings both ways. If inflation unexpectedly ticks back up, or if surprisingly strong economic data suddenly hits the wire, those rate expectations are going to push higher in a heartbeat. That would immediately strengthen the dollar and instantly place renewed downward pressure on silver. It's a very delicate balancing act, and literally any incoming economic report has the potential to completely upend the current trajectory. Now, what's really interesting about this is the massive psychological weight attached to one single number, $70 per ounce. With silver currently trading around 65, it's well within striking distance of this critical barrier. And let me tell you, everyone from retail day traders operating out of their living rooms to the institutional giants on Wall Street is watching this exact target. Psychological levels like this act almost like gravity in the financial markets. They either pull the price toward them to test the limits, or they violently reject the advance.
Reaching that $70 mark requires overcoming a fierce battle of market forces. The bull case relies entirely on continued buying momentum. If the dollar keeps weakening, if rate expectations stay favorable, and if both industrial and investment demand hold up, well, silver has a clear runway to push higher. However, Fighting against that is the very immediate threat of a profit-taking correction. After a strong rally like the one we've just seen, traders love to cash out and secure their gains. And that sudden selling pressure, it can trigger a sharp, short-term drop, even if the longer-term trend remains fundamentally positive.
Navigating this kind of environment requires one strict discipline. Watch the price action, not just the headlines, because silver is notoriously more volatile than gold. Both breakneck rallies and sharp corrections can happen in the blink of an eye. The daily news buzz is always going to try to distract you with sensational narratives, but the actual market movements, the way the price behaves, pauses, and consolidates at key levels, that tells the true, unfiltered story of where the big money is actually flowing.
So the crucial point is knowing exactly what to monitor to anticipate those directional shifts. Your radar needs to be locked onto 5 specific pillars. Number 1, track the strength of the US dollar. Number 2, watch shifting Federal Reserve interest rate expectations. 3, keep a really close eye on upcoming inflation data. 4, monitor the pulse of global industrial demand. And finally, number 5, stay aware of shifting geopolitical sentiment. These are the fundamental forces at play, and a sudden shift in just one of these pillars can turn the market on a dime.
As we wrap up this explainer, the market sits at a truly fascinating crossroads. The central tension is palpable, with economic data, interest rate expectations, currency movements, and global demand all in a state of dynamic flux. So, I want to turn this over to you. Will silver's unique dual superpower push it to that elusive $70 mark next, or will gravity take hold for a sharp pullback first? Drop your prediction in the comments below. Type 70